This is Chad Toyne with a Thursday, September 11 Market Minute from Trader PhD Ag Marketing. Remember, we got the September WASDE out tomorrow at 11 o'clock Central. Interesting stuff in the corn market. Corn has been trading quietly in a tight congestion lately. You can see it on the chart. It's just getting tighter and tighter, smaller and smaller. So what's going on? You might assume that the market just wants to wait until after the WASDE to make a move. And while that's true, the level of quietness is exceptional here for this month's WASDE. More often, you see the market move in the days before the release, giving the market a bias for how to react to whatever numbers are released. But this past week or so, we've seen daily ranges average about 7 cents, spanning from the high tick of the day to the low tick of the day. But yesterday and the day before, we've had ranges of less than 4 cents. And what about the volume? We were averaging about 200,000 contracts a day in the D's, but we've been trailing off steadily, now at only about 100,000. So there's no gusto of buyers, there's no gusto of sellers, and there's a WASDE tomorrow on top of it all. It would be a mistake to say that this market is comfortable at this price level. I think it's wound up tighter than a knot in a knothole, and it wants to spring out of there. But which way is it going to go? It's believed that the USDA is going to trim both the corn and soybean yields as well as total production. But corn has seen very little export sales lately. It's as if buyers are scared to buy at this level if the crop stays enormous. But yet the sellers aren't stepping up either, fearing that this monster crop isn't as big and as bad as everyone thought it was going to be a month ago. So folks, expect a breakout. Or should I say a fake out before the breakout? What do I mean? This tight congestion is D's 414 to 424. The trade price of 419 and 420 has been traded at every single day, with today being the 9th day in a row. This WASDE could spark a knee-jerk reaction, making the market initially go one direction, exceeding either down below 414 or up above 424, and then find that there's no follow-through. Turn tail and blow through to the other side. But which way is it going to be? We could get a true blue, no-nonsense number that blows the lid off of everything where the market doesn't look back. But I think there's twice the chance for this to be a fake-out before a breakout type of action. So don't get caught jumping in the market, taking the wrong side too early. And that's hard to do on a Friday. And if you want my guess, I think the funds are not willing sellers. I think the August low is a full month old now. And I think foreign buyers are going to step in, both on a little knee-jerk market dip, the fake out to the downside, and buy when the market moves higher, fearing that they're going to have to pay even more later on. There's still a hint of firm tone going on here in the corn market. And what about soybeans? We've been at this lower end of a trading range for a good week now, and it's holding. It's been a dry stretch, and I think folks are worried about the damage to the crop. Still a big crop, but not the monster that we thought it was a month ago. And if I were to stick my neck out, I'm calling soybeans cautiously higher. The wheat markets just continue to be a slow bleed. There's not much of a chance for relief in the report numbers tomorrow either. The downtrends are still intact. Having hedges and price protection is the way to go. So stay on your price targets. They might seem out of reach, but you've had your targets hit before, and they've given us good sell signals when they hit. Other than that, you need hedging and risk control. In cotton, the chart looks sick, and I've been calling cotton to break lower, but it's firmed up a bit on us here instead. I don't think we're out of the clear, and I don't think a downside breakout is going to end up to be going very far anyway. I'm still calling cotton sideways to lower. Interesting action in fats and feeders. Tuesday, we got the smackdown. And as it turns out, it did take the gusto out of the market, not leaving much more to the downside. Wednesday morning gapped open lower, and we traded higher all day, even closing in the green in many of the contracts. And today, we are trading higher still. I am looking for this move higher to grow into a larger leg higher, but will we reach the old highs from a couple of weeks ago? We will be taking a read on the kind of price action that we get on this leg higher. We may have to price some cattle. And in hogs, the nearbys are pushing higher, and the deferreds that have been surging week after week are fading here today. What's all that mean? I think there's still more fun to come. Watch for the Fed to cut interest rates next week and watch sidelined cash get more confident in being put into work in the stock market. The S&P has touched another all-time high here this morning. That's it for today. I'm Chad Toyne, and this has been Trader PhD. Past performance is not indicative of future results. Futures trading involves substantial risk and is not suitable for all investors.